Oh, that's good.
Should be working. Okay. So in my view, what this topic here, order block, in my view, this is the most simple and something everybody should keep at least in the back of their mind, even if they use it exactly or not. It's the concept of an order block only being the last bearish candle before a push up, or a last bullish candle before a move lower. And to me, it makes sense a little bit, because if you think about it, the banks or smart money or whatever the institutions, whatever it is that you want to call it, that is actually driving the price to where it's going. They are, for example, they are not buying when price is going up or selling when price is going down. They were selling when the price was going up before it went down. And they, you know, so it kind of makes sense that before the price is pushed down, that the banks or institutions, smart money, whatever you want to call it, is doing the opposite. So I know it sounds, you know, stupid simple. What do you have to look for? Just a green candle before a red candle, or a red candle before a green candle. But I thought we should start with the euro dollar. The dollar has been quite, I mean, every dollar pair, and I know Marco is gonna go over the Dixie, and I don't doubt that he will point out some of the same things that I'll be showing here. So if we start with the monthly time frame, me personally, you can use these concepts on any time frame, but you know, I want to try to not map out every zone on every time frame. So I focus on mostly three time frames. It's the 4 hour, that's the lowest I go, it's the daily, and it's the weekly. But then I also look at the monthly. Well, that zone is usually so big, but of course you wanna know what's happening, at least on the monthly. So I mean, every few times, every month, I look every pair and check, oh yeah, here is the monthly again. Okay. So what's interesting now with and why we have been seeing so much choppiness and, I mean, uncertainty. It's looking like it's going up. No, it's going down. And yeah, it's been quite a ride now. So we have the monthly time frame here, and if the concept is that the order block is the last bullish candle before a down move. So if we don't go further than this, I mean, then here is the last bullish candle. But I mean, I'm not going to do only the candle, since we had a move higher on this red candle after it. So I'll make the zone like this. And after that, what happens? Price drops down, and it never comes back up to this bearish order block now. But what does it do? I mean, it creates another bearish order block, right? When price goes down, and imagine this is monthly time frame. I mean, this is some proper period we're talking about here. So price pulls back, back into it, comes down, up here, drops a little bit, then up here, and I mean from this order block, now the order block is all this whole candle. I would make it only the body, and then after that, I mean, here it's time to break through. Now there is a new one here, but I'm not going to draw it here. But now, where's the new one? It would be here, right? And what happens after? The price drops. I mean, properly, right? Boom, and then never comes back. So now, where is now the new bearish? I mean, this is where we are now. So this big candle here, if we don't take the wick, only the body, and after that, I mean, it's this one, right? And then price drops. Oops. Comes back up into it, pulls back, and now is coming back into it. I mean, that looks pretty strong, doesn't it? So now you can see, I mean, this is all when price is moving, doesn't matter up or down. This is, if the trend is down, this is what it does. I mean, it creates this order block, right? This bullish candle before the down move, and either it drops, comes back into it, and then drops lower, or it does like it did here. It didn't come all the way up to it, but creates a new zone and then drops, comes into it, drops, creates a new zone, comes into it, manages to push higher into it, but it holds, then drops, I mean, properly. And now we're seeing it coming into this new zone here. But for me, the monthly, I mean, it's nice to know what's going on, but like all these zones above here, I mean, this is something that doesn't matter. Either it's going down or it's going up. But I mean, price isn't going to be up here for years at least, so that's kind of irrelevant. So let's take out the monthly zones and look at the weekly. So a nice bullish. I mean, momentum is clearly to the upside, right? And what happened? We had this big pullback where everybody was starting to say, "Oh yeah, now the dollar is back." Why did that happen? Because we have the monthly that we were coming into, and if we take the nearest, because that's of the most important. Of course, there is. I mean, the original zone is here, and the wick above is here. I mean, but that's. You can have it there, but it's less irrelevant. It's there. There's definitely orders there, and I mean, there's more chance of price coming up to here than going all the way through it. But this is the next hurdle. So I mean, we can take this out. If this gets taken out, if price can close above this candle, the chances are that it's going above this candle are much higher, obviously. Rather than maybe wicking into it and then instantly rejecting and dropping back down. So and the new candle, I mean the new zone now, the first hurdle is obviously this one, getting through this green candle, and we have to include the wick if there's a wick above on the next candle that ends up being closing bearish. So now basically if price closes above here, 1, 2, 3, 5, 5, 8, then there is more chance of it closing above this one. And if it closes above this one, there's more chance it closes above the high here. And then, I mean, likely carries on. And I mean, the zone, obviously, there was a zone here that created the zone here that is now creating. I mean, we can drag the zone all the way back to here, but that's kind of irrelevant now until this gets taken out. Then we can start to look further back, like, okay, where could it head next? So in my view, I mean, this looks pretty that it didn't carry on. And if we map the order block from here, I mean, right now it's this one, right? But before that, price dropped, and it's really this one because it's the lowest one. And I mean, after that, you can say it was this one, but that one got taken out and it created this one because price then. So yeah, so I would say this would be the weekly order block now. And coming back into this, I mean, there's no wonder why we're chopping, why it's been such a bumpy ride lately. Not like the move we had from the bottom to here, smooth, then a little bit chop and then smooth, and then plenty chop and then a little bit smooth, and now it's like in this uncertainty. I mean, it could break higher or could come back down, could go back up, could break through here. Who knows? I mean, it's a little bit tricky right now.
Got a question, Andre.
Yeah.
I don't know if you can see the chat.
Let me see. Yeah. Am I suggesting previous resistance will get taken out this week, or retracement will happen first before an attempt to the upside? I mean, as just like a good example is Burak with his trading channels, you know, with all of his lines. He says like when he has a line, the more it's tested, the more likely its price is gonna. He says like usually it takes on the 4th or the 5th attempt, it's gonna break through. And I mean the same applies for the zones. On the first contact, you're almost, especially on the bigger time frame zones like monthly or weekly or daily, the first contact, if it's never been contacted before, like this one, obviously a massive zone. This is the last bullish candle before this. I mean, it is the source of the whole move all the way down to here. So of course, on the first touch, it's going to get some, it's going to give some rejection, and it did. I mean, a proper, how much? I mean, this was what, hundreds of pips that it dropped. On the first one, did it? I mean, yeah, we can. I mean, basically in this zone here, I mean, it comes up, drops down, dips in again, proper move down, and now coming in again. I mean, who knows? It's hard to say right now if it's gonna hold. I mean, we could see weeks of more some annoying chopping. But let's go down to the daily and keep the weekly zones, so we can maybe see a little bit what's going on, what's, you know, something more clear on for the short term. So price is clearly, I mean, the momentum is to the upside, but we have these hurdles here. So where are here is the top and aligns perfect with the zone, the weekly zone. So this is the main part of it. I mean, this is the source of it, right? And this one here, it doesn't come in contact with the source, but it clearly is. I mean, it's the last bullish candle before a proper, I mean, a nice rejection here, and it drops all the way down. And now, what is happening? I mean, the body, a zone is still valid as long, you know, price can wick, price can do crazy things with the wicks, but as long as the body is still not closing outside of the zone, for me it's still valid. You know, price can still reverse. So I mean, this, you can see it doesn't fully come in contact here, but almost, but you can see, and then pushes up here, rejection, another push up, rejection, then it comes again higher, then there's a wick here above, closes below, another push up, and then back down. I mean, for me, this looks very bullish. This looks like price, you know, it's doing everything it can to push higher. We're not seeing proper. So now what I would look for, I mean, once, if price can close above here, then of course this is the hurdle. I mean, it's both daily and weekly, but then price, if it closes above here, it's obviously more likely to close above this one. And here is the full zone, and if it closes above there, then yeah, I mean, it's done. We're going to see much higher. And let's go down to 4 hour. I don't map. I don't think it's necessary to map lower than the 4 hour. You can even go down to the 1 minute to get some crazy entries. You know, if you have a higher time frame bias and you see a pullback into the 1 minute order block, you know, at the right time of the day, it's crazy. It works, but it's obviously a lot of work. So I mean, on this push up here, if we just, here is the first order block, right? This is where the push up starts, and the next one would be this one. It comes in contact with the source, right? Then the next one would be this one. Doesn't contact the lower one. Comes close to it though. A nice push up. Next one would be this one. Same thing again. Doesn't have to come back to contact to push higher. Just creates a fresh order block. We could say this candle, right? And then that creates this one, and that creates this one, and that creates this one. And then price can finally pump. That creates this one. This one dips a little bit below. So now this is the new one. So basically you can use this concept, doesn't matter the time frame, but to basically track the trend quite well. Like now, for example, if here you had this was the last bearish candle before the final push up, right? Once price closes below this, that is the first sign of the trend can be reversing, either a shorter term pullback, but at least, I mean, that is when, like, we call it the basically it would basically be this one though, because it connects to this one. But in this, this is called basically the breaker, because if this is the last bearish candle before the final push up, and it basically is, because this high doesn't even go higher than this high, but of course you have to include this candle here. It almost closes below this candle, but I would say, like, if price can close below this candle here, that would be a breaker, like a breaker of the trend, because like you see seen on the way up here, it keeps making higher. Of course, this is just higher lows, right? Higher highs and higher lows, right? Breaks it here a little bit, but then pushes back up, makes a new high, back down, doesn't break the low. Because of course it's not always going to be picture perfect. It's not going to go. Sometimes it's going to break. If this, where would we put the order block? We would have to say like this, I guess. I mean, it doesn't really close below though, a little bit. It doesn't even dip into this one. I mean, if you would go to the 1 hour time frame, you would maybe see a zone then that would make sense for it to have dipped here and then reversed. But that's a little bit, you know, it's irrelevant. Same here. I mean, here was a little bit like a breaking of the trend, the last, and like a test of. So here, this would have been a little bit of a warning sign. The moment this would have been broken, right? Because now the trend is down. The breaker is here, which is the last bearish order block. It got smashed through, and now it's getting retested and heads lower. So so until this bearish breaker is broken through, the trend is lower. So yeah, if you were long, this is where you should have gotten out and not gotten back in long until that happened. What happens then? Here we have a bullish order block, right? Price moves nicely. What does it do? Pulls back up. Here creates the equal highs. So people sold here. They sold here. Didn't get stopped out. So they got confident. More people sold here. Put the stops above. Boom, they smash above. Kind of doing a similar thing here, right? Equal highs. Dipping into what? Bearish order block. I mean, it's not broken yet. So in theory, price should just be about to push higher. But I would be a little bit, it's not right now, it's not confirmed, right? Until the next bearish order block is taken out. So yeah, tricky, a little bit tricky now. And of course,
we go sideways for a while, don't we?
Yeah, I mean, of course, but it's clear. Price is looking like, in my view, if we take the monthly, where is the monthly order block? It's here, right? But of course, there is, and we can start to cover that a little bit now. I think people understand a little bit now. I mean, it's quite simple. It's always just the last bullish candle, the last green candle before a move lower. I mean, it doesn't really get more simple. You just have to go map it on the chart, see it for yourself. Because, I mean, I think this is one of the most potent, simplest way to look at the market, and it's something that you can use. I mean, you're not gonna make millions from it every day, but you can use it for a guidance of where to put your stop. If price breaks through here, where is it more likely to head than now? But if we take the supply and demand concept. So I had that one here. So the simplest explanation I can possibly have on how to explain it and what to look for is just to look for a candle that is 50% candle. This can of course be what hammer candle, doji candle, all those indecision candle, whatever it's called. Just to make it simple, a candle where the body is 50% or less of the whole candle, and then what you want to look for after that is a big reaction candle. You want to see that indecision, that 50% candle, and then preferably a big, nice rejection away from that candle. So so looking at the monthly here, for example, on the euro dollar, I mean, if we have the nearest order block bearish order block all the way up here. I mean, why is price coming all the way down here? And why is it then stalling here, creating a new bearish order block here, going back down? I mean, what's if there is no order block here because the candle, I mean, only if this candle was green, it would be the order block, right? So the supply and demand concept basically, and it's always, you always have to, like now we have two candles, but the main focus candle is always the nearest, the candle before the move, and that's this one, right? We have this 50% candle, pretty even with and the body is very small, pretty even wicks on the side. And then we have a decent rejection here down to the previous lows basically, and then the next candle, boom, it just tanked, right? So that this is clearly, this would be called a strong, I mean, likely to be a strong supply zone. And I mean, look what happens, price consolidates here, doesn't come back up here, but it's, I mean, it kind of bottoms here, consolidates for months, and then run stops on the lows, right? Here are pretty much equal lows, runs the stops, and boom, rallies all the way up to the monthly supply. And of course, I mean, this is a monthly and clearly a strong zone because we got a big rejection. I mean, this is, we got a big move from it. So clearly it's more likely on the first contact, it never got contacted here over these, what is it, 2, 3, 4 years. And then when it does, pushes nicely into it. I mean, it is looking like it's going to try. I mean, in a strong close here, people were looking 100% looking at this candle and thinking, oh my God, this is going to the moon. And the next candle rejection, another closes below, another test of it, closes bullish, but not in it. The next candle, another push into it, and then boom, closes down, and another move all the way back down to what? If we do the order block concept, down into the order block. So yeah, I mean, we're kind of stuck between the lows. Here is some high that clearly, I mean, clearly looks like there wasn't much action, especially if you look at over here. I mean, there wasn't much price action from this time frame at least. I mean, until a wick, a little bit action here, and then they created the zone. So I mean, it's gonna look to me, if this breaks, if euro dollar closes above 12653, whatever, doesn't, and this zone doesn't. I mean, of course there are some, because this is a 50% candle. You could also say, oh, you have to put a zone here. But in my view, if it starts breaking through this, then the chances of it breaking all the way up here are obviously more. And when that happens, then it should be a smooth, a little bit more of a smooth ride up. But then you have to look at the weekly and check, maybe there is some, I mean, above here, small, no, it's the same, right? There's not much happening here. Once close above, yeah, here, it should be a pretty smooth ride. I wanted to look at, I have a couple of, how long have I been now? Almost 30 minutes. Okay. I'll try to be quick. I wanted to look at gold since it's interesting, and we can look at both concepts and see how they're working there. So if we look at the monthly, bit of a big. So here we had a order block, right? Before it pushed up. And then on this red candle, what happened? It dips into the order block. And now this is a supply zone, right? But it's a little bit tricky on the monthly, because how are you gonna, because you can see it went up, came back down and dipped into it here. So are you gonna say, no, I'm gonna mark it like this? But yeah, but it kind of did dip into the order block concept, though it didn't dip into the supply and demand concept. There you try to adjust the wicks. On the order block, it's just a candle. It doesn't matter what is the wick, how it is. It's just, if it's a bearish candle, then that's the whole But this is why, you know, I look at the monthly, but I don't focus on it for my daily trading. I mean, things get more clear for me once I get down to the weekly, and I'm not trying to swing trade something for months or for years. So now when we're at the weekly, obviously top of the chart, the all-time high. This is the last bullish candle. So now this is a bearish order block. and I mean, it looks like it's maybe a little bit more than 50% candle. I'm not sure. Yeah, probably, but okay. And I mean, from a supply and demand view, you would maybe mark it like this, but it's irrelevant because we're gonna have to look at what happened after that. So this is the candle that causes this big candle, and then it's chopping, and then we get what? Here's the candle. It's a supply zone. It's a 50% candle, and it's an order block because it's a bullish candle, and then we get a nice strong rejection candle. What happens? Price comes, dips back into it. We get another nice rejection. What happens? Price comes back into it. We get another strong rejection. So what happens? And this is what I was looking at. Then price comes down, creates this order block, right? Pushes down a little bit, and then we have a new order block here, weekly, the green candle. And then price pushes down into this weekly order block, right? And I mean, this is obviously a strong, because this whole move, price didn't and look here, here is why I like to mix the order block concept and the supply and demand concept, because in my view, for example, here, price from this order block and to the all-time high, you don't see another red candle. So this is the nearest weekly order block. Then price drops back down, and where does it reject? The first real rejection is down here, right? Why is that? Because we have a demand zone. So how would I mark it? I mean, I would obviously say this is the first part of the where it started to move. But I mean, this is obviously also a 50% candle. This area makes sense because yeah, sure, because they're all a little bit, you know, they could all be, not the middle one, but this one could be, and this one could be. So I mean, it makes sense. And price bounces, but where it really wanted to go eventually was all the way down to the order block. So I would have marked this either. I'm not sure how I did or how I would, but it's a little bit tricky with the 50% candles. But obviously this top one, since the next candle is where the big rejection is, this is where you would expect. I mean, this is a hurdle, and does it close below like the candle? I mean, barely, and instantly rejects, and then heads to the order block. Okay, let's
It's Marco's time now, Andre.
It's Marco's time now. Okay.
Yeah.
Okay, no problem. I'll let me.
Thank you very much.
Yeah, let me. I need to stop my sharing. I think it's okay. He can now share, and okay, it should be working.
Hopefully.
Oh, he's not there.
No, that's fine. Yeah, it's looking good. We can't hear you though, Marco.
Yeah, guys, can you hear me?
Yeah, yes.
Okay, fantastic. So what I thought I would do is just to add on to what Andre already spoke about in terms of supply and demand, and just give my view on it and sort of how I see these supply and demand zones. It's pretty much the same. There's maybe just slight little differences. The concepts are the same, and use two trades signals from last week, and how you could have used these concepts to get the entries. So let's maybe start with euro dollar. So the first thing that always be prepared for the week is what I always suggest, and have your zones and your charts mapped out beforehand, so that when signals do come in, you have a rough idea on where you would like to buy. Of course, the option always is to, and the suggestion is always to buy potentially as the signal comes in, but there's also nothing wrong with waiting for the best potential entry that you can get. Many times price will just rally without even waiting for you, and that happens. But I would say that there's many opportunities to get a good entry after the signal has come through. So euro dollar is the perfect example. So again, Andreas mentioned on the higher time frames where we're sitting and where are the most obvious supply and demand zones. But on the 4 hour, always get a good idea on, if you look at this current chart that we have in front of us, the first question that you have to ask is, what is the flow of price? So you can see clearly, and we know obviously with the sentiment that retail are about 70% plus short. So you don't want to look at any shorting opportunities. You want to look at long opportunities, and where are those best long opportunities? So you can see where price has pivoted before and made this big pivot over here. So if you just look at that level, as soon as this level was broken here, and quite strongly, and you can see this, what you want to look for supply and demand zones is big, strong moves away from a zone. Yeah, you can see this candle here is one of those. So if I had to draw a demand zone, let me just get it closer here so you guys can see. So what is a demand zone? It's, again, or a supply zone is a strong move away from an area. So I would map out this as a demand zone over there. Let's just, okay, that's fine. Let's just change the color so you get an idea if it's a demand or a supply zone. Let's get one closer to this week, or closer to the current price action. All right, there. Now, if you'll notice, last week, price actually hasn't reached this particular area. All right, it's left slight this week is short. So potentially, now I'm not trying to say what's going to happen next week, but what is the market doing continuously? The market is constantly in the search for liquidity. So where is liquidity most of the time? It is at supply and demand zones where we know there are large interests in buying or selling at a particular area, and at swing highs and swing lows. All right, so we know that sitting on top here is stop losses, as well as here. And where else are there stop losses sitting? Just below these wicks, right? So what I would potentially expect to see next week, and this is something to look out for, is a move into here and a quick rejection. Yeah, that would be a good indication potentially of a long opportunity for euro. Yeah, but early in the week, let's sort of see how that progresses. I just want to show you an example of this week's, or last week's, sorry, signal. David, you can just maybe confirm, but I do remember that the signal for the euro buy came in on the 20th, I think. I'm not too sure exactly what time it came in, but it was definitely on the 20th.
I'll check.
Okay, so knowing what the flow of price is currently on euro dollar, it's bullish. Higher highs, lower highs, higher lows, etc. The flow is clearly up, all right? So it's looking for that opportunity to buy at the best price. So let's quickly look at the 30-minute chart. All right, so what I do initially early in the week, and especially I don't like to enter in trades too early on during the week. I like to let Monday play out. So what you can quickly do, just as a suggestion, is mark out Monday is high, and I'll do this with a dash line.
It was the 20th, Marco.
Was the 20th, yeah?
Yeah.
Great. And Monday's low. All right. So first off, if price breaks above Monday's range, already that's a good bullish sign. All right. And as long as there's no major supply zones above, it's a good indication that price wants to go higher. So looking at this 30-minute chart here, what stands out for us, right? This area. And funny enough, it's the area that broke through Monday's high. Okay, strong move away. Most important thing is you don't want to see any type of delay in moving up. So you don't want to see maybe one candle up and then it sits here for a while and then moves up. You don't want to see that, right? You want to see strong, powerful moves away from an area. Okay, so this was done on early Tuesday. Sorry, 2 seconds, guys. Okay, so strong move away from the area, right? So take it from the base. Can you see there's a clear base of candles sitting here, all right? So take it from the top to the bottom, like that. So what does it do? Comes in, bounces around this area, all right? That was the 20th. So again, we could have, and notice how it approaches this demand zone, all right? It's a nice rounded return to the zone. So it moves up strongly, comes down, all right, has a nice rounded shape. So that's an excellent sort of approach to the demand zone. Either wants a nice rounded shape or you want a channel shape, so like a bear channel or a bull channel, or preferably for a demand zone, you want a bull channel movement into supply. So already with that strong rejection off that zone, that already was an excellent indication. So if you're up again, okay, so these times are GMT +2. So I'm usually up pretty early. So if I had seen that up at like 5 o'clock in the morning, I definitely would have gone long euro. Or as soon as that signal came, I would have absolutely no hesitation in going long, knowing where price reacted from. So that was an excellent indication of how you could have used this demand zone. And sometimes because we're trading on a week-to-week basis, nothing wrong with going onto the 1 hour or the 30-minute chart and have a look where are these clear demand zones and supply zones. So just from a supply zone, all right, where's there a strong move? Yeah, right. Okay, let's turn that to red. Okay, so what do we see here late in the week? All right, strong move from demand, and look at the rejection here at supply. All right, thing is to notice, what do we see here? 1 touch, 2 touches. All right, so that means there's already 2 touches where some sell orders have already been absorbed by the market. All right, which means that this zone now is not a fresh zone, all right, and has already been tested. So you can have there can be a strong indication that on the next visit to the zone, so if we do have a bear trap set up on the 4 hour and price moves back up to this area, high chances that this will be engulfed. All right, so that's what the market tends to do. So I'll give you an example here. Quickly drew this earlier today. The example of compression in the market. So if you can imagine price is moving down and price is creating supply zones along the way. All right, moves away, tests this once or twice, moves away, tests it a few times before it moves down and moves into a very large demand zone towards the bottom. When price starts to move back up, because these areas have been tested multiple times, they become weak. and price then has absolutely no problem in moving all the way through. So this could be something that is setting up on euro dollar for this week, all right, just as an idea. Okay, let's quickly look at Aussie dollar. All right, so this one did not work out perfectly this week, and just how you can plan for it. Let's quickly move this onto the 2 hour. All right, so this was a signal to buy. So the previous week, this is what became the hurdle for us, yeah? This structure here. And you can see the order came to the bar, so it came around about, I remember I took the trade, because again, I mapped out Monday's high. And you can see price moved above Monday's high, and you can see it sat here for a very long time. All right, and because it came down and it was testing, I thought, okay, well, that looks pretty good. It's finally supported Monday's high, but as soon as it broke down, I closed the trade. Yeah, so I closed the trade and rather waited to see if it could maybe reclaim Monday's high to maybe make a move up and go test this supply zone again and hopefully break through. But that was the hurdle. So how would you trade something like this in future? Or if you know that there's a supply zone over here, probably wasn't the best idea to go long, rather wait for a situation like this, for price to break through and create a new demand zone and wait for the market to retrace and then buy there. That would have been the best option. And that's why I say it's so important to map out your charts before the week starts, so that you know where price is the flow positive, is it moving in higher highs, lower highs, and mark out your supply and demand zones, and just know where you want to buy or where you want to sell and where your best entry is. Another aspect that I want to quickly discuss is the idea of the strategy of the London fix. So the London fix is something that happens at 4 p.m. UK time every day, Monday to Friday. Let me just quickly get up the description for it. So the London fix is the benchmark value of a currency pair on any given day, Monday to Friday. So this happens between all the big banks, and they decide at 4 p.m. A benchmark rate where most of the buying and selling will take place. So this happens again 4 p.m. London time. So on my chart here, and I'll use euro dollar as an example, it's between 5 and 6 p.m. So I'm going to mark this out there quickly, change that to just to gray. All right. So usually I don't use this as an area to buy or sell, but I use it as a bit of a pivot. So again, look how it's just very interesting how price reacts at these levels. So if that's the London fix, all right, price above, breaks above. So again, for me, that's a nice bullish sign. Support of the London fix going into Tuesday morning, breaks above Monday's high, looks pretty bullish, but now we know that supply zone sitting on top there, breaks back into Monday's range, breaks below the Monday's London fix. And I only use Monday's London fix as my main pivot point for the week. It's the most important that I find. But can you see how that became resistance? Yeah, fell away, came back, fell away, eventually got back up. But you see how price is using this as a pivot. So to me, looking at euro dollar for the week, to me, this basically tells me lots of indecision. Price is above, below, below, above, below, above, below. You can see there's just basic indecision. Now, quickly look over there. Okay. Look at that. It's actually left lots of stops over there. Yeah. So I wouldn't be surprised. Maybe another push up into here before selling off. But Again, looking at the daily on the euro, on the Aussie, it's so difficult to know where price wants to go. If you really look at this, all right, I could maybe talk about head and shoulders pattern there, another one, yeah, but it's not very clear where price wants to go. Potentially, perhaps, where would we base this from? Probably over here. Actually, it's actually better here. Okay, where's the strong candle? That's the base, that's the strong candle. Yeah, that moves away. So you always want to talk about or draw demand zones, supply zones, where that strong candle breaks out. So what do we have sitting over here? Or below all these lows, all right? Again, liquidity. So we could potentially, you could either buy at the zone, okay, as a demand zone, or you wait. A more conservative entry is wait for price to break back up above these lows and into there. All right, so I just want to show you a quick, not that one, just a diagram from my mentor, who is Sam Kloot, just some basic setups that you can use. All right, so this is Trader Simon's basic sort of setups, or most common setups that you'll find. All right, so you have your standard supply zone. All right, so that's when price pushes up, consolidates, strong move away, wait for price to move back up to supply, sell supply. Supply continuation, that's in a downtrend. Price moves strongly down, consolidates, strong move away, sell supply. Same thing with the other side on demand zone continuation and standard demand zones. Okay, so these are the bull traps that I spoke about, all right, for bull traps and bear traps. So in the example of Aussie, you can see, if you look at this setup here, bear trap, aggressive entry. Demand, strong move away, stops just above, you can buy demand, all right, or the more conservative entry, wait for price to spike demand, get above those stops, go long. So if you just concentrate on that setup over here, all right, and we quickly look at Aussie, let's move it up there, all right, you see that setup there, stops sitting all at the bottom over here with a decent demand zone below, which is a nice daily demand zone. So we could see that type of setup. Okay, then what we haven't really discussed is your standard demand zones, supply zones, but engulfing of zones. All right, so that's any supply zone or demand zone that's been engulfed, which means that price has gone through, you start to have a bearish bias on price. So that's, let's try to find anything on this chart, perhaps on the daily. Okay, here's one example. Okay, strong supply zone. Okay, sitting here. All right, so look at price, how it reacts around this area. Okay, strong move away, wait, can you see first touch, spike, move away, all right, comes back again, spikes, moves away. But how many touches do we have here? 1, 2, 3, 4, 5, 6, like 7 touches before price breaks through, retest, strong moves away. So as soon as a strong supply zone like here gets engulfed, your bias needs to change. And then what you want to do is buy at any other demand zone that's formed. So there's a demand zone here. Always trying to find the strong ones. All right, the most powerful ones. Yeah. All right, but what's worrying me a bit about Aussie is this demand zone here. If price starts to move back here and it doesn't spike these lows and move away, it's going to be testing these areas again quite a few times. So potentially it can move down, sorry, into this area over here. So that's potential. Price is just not moving, not really going anywhere. So price needs to find liquidity. Yeah. In order to move higher, it needs to find, there needs to be some sort of impetus, some sort of liquidity needs to be found. And I'm not sure if this area is where it's going to find the liquidity, because so much liquidity has already been taken. So the next big liquidity is potentially down there. Yeah, it's obviously the dollar doesn't look great. I'll quickly let's do a DXY. There's 5 more minutes left. I'll quickly do a long-term chart that I've drawn up here. All right, so this is just a 2-week chart, because on the lower time frames, it's a little bit choppy because of where price is. So if we look at the 2-week DXY chart, we have a strong demand zone in control currently. All right, so this is the base, strong move away. Okay, clearly we can see price has now been multiple times has tested this area. So we know it's weak. All right, it's gonna break through at some point. Can it still bounce from here? Yes, of course it can. Until the zone is completely engulfed, we have to have the potential for price to break up. But since price has bounced from there and retested this ascending trend line and rejected, I would probably say that we will go through, but we could sit here for a very long time. The thing is, Euro is looking pretty bullish, but Aussie and New Zealand and the Kiwi are not looking, they're sort of just hanging around. So it's a little bit confusing at the moment, even with the yen. Some of these pairs are just not making too much sense to me. So again, it could be the risk, the fact that crypto is crashing the way it is. I'm not sure if we're going to see something with indexes, but yeah, we'll just have to wait and see. So yeah, guys, that's it from my side, I think. If there's any questions.
There was a question about London Fix from Andy. Marco, I don't know if you can see the messages.
Let me quickly
First
see.
Monday in the month.
No, so the London Fix actually happens every single day at 4 p.m. London time. But I only use Monday, so each Monday, every week, the Monday London Fix, I'll map that out. So you can even use it potentially, go back for every Monday at that particular time and map it out. You might find that price will go back to a London Fix that had a strong reaction for. So treats it like, you can even treat it like a supply or demand zone. If there was a London Fix where there was a strong move away at that particular time, you can treat that as a zone. And you'll see that it might come back to it 2 weeks later, a month later, but there will definitely be a reaction from it. So let's quickly see if I can just find one quickly, just as an example.
Also, I think you might be right with crypto. It might be signaling some risk off this week, I think, because it's crashing quite hard.
Yeah,
isn't
it's the same. It is. And again, these markets are a lot closer correlated than they were before.
Yeah.
And the fact that also Euro Aussie is looking like it wants to break out. I think I probably need a bit more confirmation, but that's just making me a little bit nervous. Okay, so I'll switch on. I've got these funny colored candles here are the Monday range. So let's try find. Okay. Let's see here. All right, well, decent example here. On the hour, sorry, okay. So again, look how price reacts. It was end of the week, all right, but okay, 5 o'clock South African time, which is 4 o'clock London time. So this was last week, all right? No, It's going back 2 weeks. All right. Now just watch our price reacts at this level. Yeah. So Monday initially falls away. Strong reaction. Sorry, guys. Strong move away from this level. All right. Comes back up. Test this rejected. But as soon as it breaks through, all right, comes back down. Massive strong candle away from there. All right. Comes back again because this now is a demand zone essentially. All right, because of the strong move away. But it's also is encapsulated by the London fix on the 3rd of May. So basically the beginning of the month. And again, look at the price reaction from there. So that's why I feel that it's worthwhile. It's hard because you can't say that, I will buy at this level all the time or sell at the level all the time. If it's below, sell on a retest, or if it's above, buy. But it's giving you, I feel it really helps you just to create a bias. So, because of that strong move away, that first test, because again, it's a demand zone, if you want to call it that, because of the strong move away, you could have drawn a supply zone there. It did have a slight reaction away, but quickly moved above. Yeah. And again, to me, if I'd seen something like that, I probably thought, well, let me buy that, because it's giving you that bias of bullishness. So yeah, it's definitely something worthwhile. Mark it out. Don't trade it initially straight away, but start marking out these levels all the time, every week on a Monday. You can see that Monday definitely has the biggest impact. You can mark them out for Tuesdays, Wednesdays, Thursdays, Fridays. I just don't find they have the reaction like Monday, because lots of people use the Monday breakout strategy as an option to get into trades. And I think Monday just has a very clear determining factor for the rest of the week. So yeah, just something to try out and see if it assists in any way. Any other questions?
No, nothing from me, but thanks very much. It's been really insightful.
Yeah, thank you, Marco.
Thank you.
I wasn't sure on the London fix properly, but yeah, it looks good. I might at least start using the Monday.
All right, awesome.
Okay, so we're calling it a night.
Yeah, I guess so.
Okay.
Thank
Yeah, I
you.
think so.
Yeah. Thanks everyone. Was a good
Thank
one.
you.
Yeah, and I'll send you the recording, David. It worked. It worked this time.
Brilliant. That's cool.
Okay. Okay.
Excellent.
Have a nice evening, everyone.
I'll speak to you guys soon.
Yeah.
Speak to you Monday. Thanks, guys.